Hello my people, welcome back to our YouTube channel. I'm Ken Omolo. And as promised yesterday, I want to take this opportunity today to take you guys through the rebound trading strategy that we introduced yesterday on Telegram. So if you are a member of that Telegram group, then you must have seen that it worked for us most of the time. At least I only lost once out of 5 trades, and those who traded with the signals also made some money. So I'll take you through the basics, then I will try to explain a few things. Maybe if there's anything that you've not understood, you can post it in the comment section, then I'll get back to it later on. Okay, so in order to begin trading with the triple rebound strategy, you need to be a VIP trader. Yeah, so to become a VIP trader in Trade, you need to make some deposit. Yeah, so the minimum deposit for a VIP trader in Trade is only $2,000. But if you can't afford that, you can set up the strategy manually. I explained it yesterday, and at least I saw someone like Lynn do it by yourself. So it means it's something that you can also do on a small account, regardless of the amount that you have in that account. Okay. So otherwise, if you are a VIP trader, it's easy. You will just click on the you'll just click on the indicator tool, then you go to strategies, scroll down to the bottom, then you can activate the triple rebound trading strategy. So now when you go back to the platform, you'll notice that 3 RSIs have been added to that platform, each with a different period. This period 7, this period 14, and this period 21. So for someone who is not a VIP trader in Trade, let's just disable it. For someone who is not a VIP trader in Trade, you can just activate the RSIs manually. Just go to indicators, then find the RSI. Let me just go back. It's under oscillators. So we find the RSI and add it to chart manually. Okay, so we find another one and add, and find the third one and add. After adding the 3 RSI indicators, you can change the periods manually. Example, the first period on our strategy was period 7, so we'll just reduce that to 7, then apply. The second one is 14, so we just adjust the third one to period 21. Okay, so now that we have all the periods set, if you go back to the platform, you'll notice that the strategy has just applied itself on your platform. So for someone who doesn't know what the triple rebound trading strategy is, let me just give the definition. The triple rebound strategy is a counter trade system showing the most profitable points of correction or trend reversals. So this strategy is based on the principle that the price will always change in waves. Okay, so after an impulse movement, you'll notice that there is a correction in a market. Example, let's just see an example like a place like this. You see there is an impulse move downwards, then there is a correction in that market. Yeah, you can see that it's becoming bullish after that sharp bearish move. So if you look at the RSI, you'll notice that the RSI has also picked that on the three periods that we've set, period 7, 14, and 21. Okay, so if you've already said that, you already know what the strategy is. Here are a few recommendations that I'd also like to put forward before you can begin trading with the strategy. Okay, so if you've already set up the strategy and you'd like to begin trading, don't until you hear these 6 recommendations. So the first recommendation is you need to trade with this strategy on periods of high market activity. So that means when you're trading on a volatile market, you'll get better signals, and your chances of winning will be higher. Okay, so one recommendation is you need to trade with this strategy on periods of high market activity. When there is volatility, you can trade. Okay, so the most clear signals are generated when the price of an asset is near a strong resistance or support level. So you can also use this strategy alongside the support and resistance strategy. So if you've watched our previous videos on how to set support and resistance, then good for you. If you haven't, we can still do it roughly on we can still do it roughly on a place like let's just find a suitable place for to set up support and resistance. So we can set it up here. So you'll just click on the indicators tool, then pick I think it's in indicators, indicator, no, it's not there, it's in the it's in the it's under lines. Mostly I trade with my laptop, so the mobile is kind of tricky, but it's something that you can just do even with the mobile version. Okay, so I'll just move myself to the top. So to set the support and resistance lines, we'll pick an horizontal line that is for a ranging market, then we just set it up. Okay, so when you click on that horizontal line, you'll notice that it kind of attaches on the platform. So what you'll do, if you need to change to move it to a different level, you'll just double tap on your screen and move it with the arrows. Okay, so if you want it somewhere here, example, you want the support, you can say you want the support level here, and make sure that when you're setting the support levels, you make sure that your horizontal line touches as many lows on the platform, on the chart, as possible. Okay, so we can just move it a little bit higher to touch that pin bar there. Then we add another horizontal line, so that will be our support line. For someone who is just hearing about support and resistance for the first time, the support level is the level on your chart or in the market where prices seem not to go past. Okay, so you'll notice that when prices come, example, you can see here, prices came from the top to the bottom, they got here, then they kind of found a hard flow on that level, and they turned upwards, moving to the top again. Then they found some ceiling here, then moved to the bottom, and now they are moving back to the top. So markets move in those patterns. You can't find a market that is just straight to the moon. Okay, likewise, you can't find a market that is just deep to the ocean again. Okay, so it varies, and that is why you'll always hear traders complaining that if I do this, the market does that, if I do the other one, the market, it's because it never moves in the direction that you want all the time. It moves in waves. Okay, so let's set our resistance line. So again, we'll pick the horizontal line, double tap on it, the other one, double tap on it, and we move it to that level. Yeah, so now you see we have our support level here, we have our resistance level here, then we have our RSIs. Okay, so again, another principle that you need to learn, I hope I'm not giving you too much information on the same video, but if you've been watching our videos, then you are familiar with the concept of oversold and overbought zones on these oscillators. So when you notice that when the market is in the oversold zone, you'll see the RSI going below the 30 level. Okay, and if a market goes to the oversold zone, then chances are it will reverse to try to go up again. Okay, so example, you can see it came to the oversold zone here. It didn't reach, but it went back anyway. So the opposite of the oversold zone is the overbought zone, that is the 70 level. So you'll notice that when prices go above the 70 level, they'll tend to go down, back down, trying to consolidate whatever is happening. Okay, so the same concept applies on support when you're trading support and resistance level. You'll notice that when prices go to the support level and they can't seem to break that level, they'll tend to bounce back towards the top. When they reach the resistance level, they'll bounce down towards the bottom. So support and resistance levels can be set on different levels. Then again, they don't have to be horizontal all the time. Sometimes you'll find a support and resistance, a support level drawn on this level here, touching the swing lows, and here touching the swing highs. So you can also do that by picking the trend lines. Example, on this level here, if you wanted to create a support and resistance level, you'd just move this. You'd just move that. Let's try to move it. So we just move this here. Sorry. I can't seem to get a grip of it. Yes, here we are. Doesn't want to move, so we'll just do it. We'll just find different way to do it. Yeah. Yes, so that's another way of setting up a support level. If the market is on an uptrend and you want to set up a channel along that trend, then you can use the trend lines. Okay, so you can use the trend lines to do that. Okay, so another recommendation that I want to put forward for someone who is watching this video and you want to start using the triple rebound strategy, the most active periods on any market would be around 10 a.m. to 8 p.m. UTC. Okay, so you can add 3 hours to 10 a.m. if you are in Kenya, to find a suitable time to trade with this strategy in Kenya. Okay, so the next thing that you will need to do to trade with this strategy is to select an asset with a higher rate of return. Example, if you look at the Euro New Zealand dollar that is currently on our chart, it has a 90% profitability, so it's a good asset to trade with this strategy. Okay, so that is it for the explanation. For someone who wants to trade with this strategy and not to follow anything else. So what you look at, obviously what you look at when you want to trade on a downtrend is, let me find a suitable place to explain. So example, if you want to trade on an uptrend, you look for the RSIs, either of the two RSIs, whichever you see go below the 30 level. As soon as it gets into the oversold zone, then you'd expect that the market would try to consolidate, like you can see in the chart here. There was a spike here, then there was a correction. So you'll notice that when the spike happened, the market was in the oversold zone according to the RSIs. So when it goes above the 30 level, then a correction is expected in between, and you can see that it happened. Okay. Vice versa, when you're trading on a downtrend, you wait for the RSIs to go to the overbought zone. Then as soon as they reach the oversold zone, and you can not see that on either of the two RSIs, if there are three, like you can see on this level here, the better. Then you'd expect that the RSI, the market would make a correction. It will consolidate, like you can see on this level here. It was in the overbought zone, then it consolidated. So you can trade against the main trend, which in this case here you can see is an uptrend. Then during the consolidation is when you trade and make your money here. Okay, so there are very many different levels of consolidation that we can see on this market, especially on periods like this. You see the market made a spike, it moved back to the bottom. You can see another spike here, then consolidation. So if you want to trade with the triple rebound strategy, you'd ask which time frame should I use. You can use a 1 minute time frame. Trade duration, you can set it to 1 to 2 minutes and trade. Okay, so if you need more explanation about this strategy, if there is anything that you've not understood that you need explained, you can leave your comment down below. If you don't have an account in Olimtrade, you can click on the link on the description of this video. Also, make sure you tap on that subscription button and turn on the notification, so that next time when we do another video about these strategies, you can get notified. Until next time, bye bye. I'm Ken Omolo, signing out.